That's right. I haven't traded, made a video for a few days, and I've been busy working on the Asian range. That's this gap here. The Asian range is from 1, according to Investopedia, from 1 a.m. to 8 a.m. That's the dark green box there. And then you just extend the lines. Daily line box is the indicator you need. It's free. It's on Forex Factory. Google it. I have made videos about how to set it up and everything. It's a brilliant piece of kit, great for statistical analysis. Anyway, apologies for all the lines on here. I think it was Mike asked me what this skull and crossbones was here for. It's because of this indicator, Mike, I think. Something to do with, if you Google on or Forex Factory, alien intelligence or something, and you'll find the guy was banned, I think, from Forex Factory, so he is referred to like that. I forget his proper name actually, but he's got his own forum. If it comes to me, I'll mention it in the video. Anyway, I digress. The Asian, well, basically my method, 3 candle reversals, is just a trend reversal, which is quite powerful in my opinion, because it's a trend reversal and a close above a previous resistance level, which tends to mean the resistance has failed to hold in a long up run, and support in the down move has failed to hold, so we can go down. So we're talking about Asian session, as I said, GMT 1 till 8 a.m. Got a lot of rubbish on this chart. This MA is the hourly 8 EMA, and it is calculated for every time frame, so that it looks the same on every time frame. We can get rid of that actually, because it does sort of complicate the charts. All I use that for is what I call the rubber band pullback at the end of the day, when the ADR is overextended. Well, not necessarily the end of the day, but when we've got an overextension of the ADR. It's a random number. You could use 10 if you want. Some people swear by different, everyone's got their own different preferences. I just happen to land on 5. No statistical reason, but it does then allow the shorter the amount of time, when you've got volatility in the market, obviously that will be probably a truer figure. So anyway, back to trading the Asian session. You can use the RSI trigger, bust, pullback, break and close above the bust, and when you get that combined with the 3 candle reversal, and maybe in this instance you've got the Asian low, which was formed here, the high was there, the low was here, and then as you can see, price just bounced around off of it and then used it as a major support. So for some reason they didn't want to let price go below that. So how to trade this? Well, I've tweeted a lot of setups today, 3 or 4 in fact, trading to it, and then if you combine it with the MO line, or you might like to use pivots, R1, R2, all that sort of thing, or S1, S2, and trade to that. You might like to use round numbers. You can see how this round number has been respected, and then this half round number has been, or quarter round number has been respected, and then equally the Asian high has been respected as well. So, you know, the point I'm trying to make with this video is you can use any method you like to trade horizontal lines. I'm employing this method very successfully, just using my 3 candle reversals. I have to admit, the more I tweet, the more I stare at charts because of COVID lockdown and stuff, the massive amount of extra trades I'm finding I'm having. I used to stop around the Frankfurt Open, London Open, because you know, I'd convinced myself that there were very few trades around and that it was just a complete mess of a market during the time that the algorithms and the big boards were playing. Well, we can clearly see the tradable opportunities. Whoops. Right. Yeah, GJ, we can look at any chart and the Asian session will be respected. you know, it's pushed up to it. Well, it's created it with that candle there. Then we've pushed back. Then potentially we could have traded it back up to it on the 5-minute chart or a 1-minute chart, and then as you can see, it's bounced off it and carried on using various pivots and round and half round, well, quarter round numbers as well. So any pair, gold included. Whoops, gold is a mess because of the gold. Oh, sweet spot gold it's called. I do apologise. But we can go back to currency pairs, any currency pair, and you will see that the Asian session is respected there. So it can be traded with anything. Everything, as I keep saying, everything you need is on your charts. Pound, Aussie dollar, very small Asian session thing there. I must admit I'm working on the fly here. Euro USD, as you can see, it's created the high there, it's created the low here, then it's gone straight back up and used the high of the Asian session. If that's not tradable, I don't know what is. And then, you know, as I say, we're on a 15-minute chart, but a 5-minute trade up to the R1 could have been perfectly traded. So, you know, all you need is on your charts. The MAs I would take off to tidy the charts up, and perhaps have a different, if I were you, have a different template that uses the MAs. But you know, these charts, any chart can be traded this way. Allow the data to update. So there's the low, there's the high. Look, come back and tested the low, then it went back up and tested the high. And with this, it's a good range that we've got to, you know, trigger breakouts of it. You know, I'm not a great fan of breakout trading per se, but when you've got clear levels being used, like this R1, and there's the daily pivot there, but look how it's respected these. This is the whole point of this, and we can go back. It's not just a flash in the pan, as it were. You can go back over years. High, low, come back and tested the low. That's a classic reversal trade there, trendline reversal, making lower highs this side, and you've got the RSI 3-candle reversal here, and an RSI momentum break of the 20 level would have got you in for a good few pips there, down to the pivot, to the pip. So everything you need, guys, is on your charts to trade yourselves. That's the whole point of my Twitter feed, as it were, and in fact this YouTube channel, is to explain to you, describe to you how you can trade it. Low, high, then it's come back and tested the low, bounced off it, RSI momentum move, 3-candle reversal, bang, up it goes and tests it again. So, you know, it's not any coincidence, guys, that you can trade this. Not such a good example here, but there's the Asian high. It's come down, tested this clear support, then pushed on up, and then gone up and tested R1, and so on and so forth. So, you know, all you need is on your charts. You don't have to have fantastic highfalutin indicators. Low, high, came back and tested the low, bounced off it again. Started a downtrend in this instance, and came and pushed through. 3-candle reversal through, RSI histo bust, break and close, down she went again to other levels. So if you've got some decent quality horizontal levels, guys, you can trade it using a decent momentum indicator and a few decent candlestick chart patterns. You do not need anything else. Okay, thanks for watching, have a great day, and I hope this helps a little bit.